Welcome to the Nevada Real Estate Post. I'm your host, Jeff.
And I'm your host, Tim.
And today we have special guests, John Roanoke from
Finance of America Mortgage.
And today we're going to be discussing what's going on in the lending world. So everyone, get ready! So to start with, or what we really want to talk about today and concentrate on is the interest rates. We've seen since mid-September, sometime in September, the rates have gone up about how much?
About a quarter to 3/8 of a point, depending on program.
Yeah, so I mean, it is going up. We've seen interest rates go up. The Feds do meet on December 14th.
Correct.
And the expectation is from experts that we're going to see a hike in interest rates even more.
Yeah, we should.
But I mean, as we've talked about, we were talking about earlier, we can't sustain these low rates. I mean, really, the government can't sustain this forever.
And it's almost like it feels like it's a subsidy program to keep those rates down. When we're talking about, institutions and places lending money for, almost less than they're getting it at. Thank God the government has pushed the Fed funds borrowers down, those rates down so much, but it's still, there has to be a time where things return to normalcy and the market dictates what happens. And I think we're going to start seeing that hopefully after, the election and getting into the first of the year to start to see some normalcy happen, that we see, hey, if money's going into the stock market, then it's out of bonds, or if money's coming out of the stock market, then it goes into bonds, and we start seeing some of those relrelationships return to normalcy. It'd be nice.
Are starting to settle down as far as the European markets and Japan and China and that kind of stuff. So, before everybody started to plug into ours.
Yep.
Now I think things might start to settle out to where, okay, they're trying to go back to where they were a little bit.
Yeah, exactly. Again, and we haven't seen in the last month anyway. I haven't heard a whole lot of, okay, this country's going bye-bye at this point, and this one's going to go belly up, and this one's leaving this union, and this one's doing that. It seems like everyone's kind of just like settled down and go, let's just get our stuff working the best it can work.
Sure. Well, tell me if you kind of agree with this. I saw a report about interest rates obviously going up December when they meet, when the Feds meet. And one of the predictions is for a short term, we're going to see, we all know that when the interest rates go up, the stock market just kind of tanks. It goes down right away.
Right.
So what this person was saying is they're expecting an injection of that money from the stock market into the bond market. And if we see that would drop interest rates down.
Correct.
But the prediction is it's only temporary, and then it's going to come back up because they think the recovery in the stock market is going to be a lot faster. So it'll recover quicker, and then our interest rates will remain higher, where they should be. They really should be a little bit higher.
That's what we've seen. But again, even whether it's that market or the stock market or what market it is, the more the government's in playing with it and giving things to keep things, the country understands we needed that help and whatnot, and that's what the government felt was the best thing to do to get us through that. But we are a free country and we have free enterprise, so some of that stuff needs to start rolling back to the market dictating what's available.
At some point, the country's going to have to get back on the bike and not get held by the government.
Walk on its big boy feet, right? Ride the big boy bike. Exactly.
Well, I'd mentioned a while back and in another video too, my first home I bought back in 1991, and it just tells my age here. But anyway, my interest rate was 9.5%.
Yeah.
And I bought it because interest rates had dropped down under 10.
And now people still hear that, oh my gosh, the government was going to make rates 3% years ago, and people still, I want 3%, and why don't I have that? And I saw on the internet, everybody right now more than ever, people are getting rates based on how they qualify. What's their credit score? What is their income? What is their, their savings and their ratios and their down payment? And all those factors come into this. So,
that's the scary part about the internet, though. People go on there and they're like, well, I can get an interest rate for like 2% or 3%.
I had a specific example. I had a VA guy out looking for a loan, and we thought we were great at 3 1/4 or 3 1/8. And he's saying, man, I'm getting 1.75. I'm getting 1.75. You're not even close to that. And I said, that's a head scratcher. Give me the information you have.
Yeah, where are you getting
that? All figured out.
Yeah.
What happened was the poor guy.
How far did he buy down the interest rate?
3%.
Right.
So he was paying 3 points to buy the rate down.
Oh, right.
And that wasn't explained that way to him. It was no, you get this rate, and this other guy's horrible because he's at a normal rate.
Sure.
Well, paying 3 points on a $300,000 loan is $9,000.
Yeah.
That
and that's
makes
the part
sense
that
to buy
they
a
can
rate
explain
down
it to
like
you.
that.
Sure.
Sometimes we need to be there listening to the clients and also let them know, hey, we'll run this out for you, and let's make sure what you're being told is actually what is correct.
Sure.
And if that is what it is, and somebody beats us and they have the best rate and a better product than us, then so be it. But we're a big bank. We have creative teams. We have great product out there available for people. So no one really has anything crazier or one up on us. We pretty much have the resources.
And most lenders nowadays kind of all have the same kind of stuff.
It's very similar. Your service levels and your execution are going to be key in getting loans closed. And
that's the key. But as far as the loan programs themselves, they're pretty standard.
Programs themselves, there's a lot of standardization to them. Yes, absolutely. There's only one or two little tweaks you'll see in different places with someone doing a product that's.
Any newer packages that you guys like coming up? I mean,
We do. We have some pretty cool packages coming up. They're right now. Finance of America, being a big nationwide company backed by the Blackstone Financial Group, is awesome. But they've rolled some stuff out for the East Coast, which they're working on getting licensed as they move across country and rolling it out to the West Coast. But we have some pretty interesting investor products coming up, as well as some other stuff. The key with those is doing them internally, where our underwriters across the hallway from us, and stuff like that. That way we can get communication on these files and be a little bit more responsive.
Man, that seems to be the kicker for most lenders is when it goes in the underwriting process back behind the Wizard of Oz curtain.
Where does it go?
Yeah.
Everybody's like, oh God, where'd it go? Okay, I thought I had a pre-approval. Now you're telling me it went to underwriting. I still need this, and this. That's the tough part for people to understand.
I thought you said I was approved.
Right, sure.
I always loved your definition, the Wizard of Oz.
I'm telling you, man, it gets stuck behind the curtain. It's like, okay, no, that wasn't the final decision yet. So where'd we go? So that's the hard part that people, they don't understand, I think, a lot of times, is when they get that pre-approval letter. It's like, okay, I was pre-approved, so I should be good to go by the time I go to close. Well, no, there's part of a process throughout there that underwriters have to check through, and processing and everything else. But
if you're local, we are requiring that you come in and sit down for your approval to go out. Because we don't just do a pre-qual with gathering some data over the phone and running their credit report. We get the documentation, we get the tax returns, the bank statements, the W-2s, and really take a look at it. If we have questions, we can go ahead and put that person in to be underwritten ahead of them even getting a property. Make sure they're good to go. I have a guy who's doing a 1031 exchange now. Well, once you get into that, you can't get out of it. Mm-hmm. So he needs to be darn sure that, hey, I'm approved, I want to do this much, I either want one house like this or two houses like that. And with the timelines, he understood, hey, it's great. So we actually got the rest of his stuff yesterday, and that's getting uploaded to underwriting today. So he'll be able to go shopping knowing that he is approved and ready to go, not just hoping.
Well, ultimately, before we close out here, predictions on interest rates. What's your predictions?
I just definitely think they're going to be starting to go up near the end of the year. Even if they creep up a little bit and then drop a little bit, then they're going to start moving up next year. And I wouldn't be surprised to see an increase of a point or so in rates at least over the next year.
Even at that, what's that take it to? 4.5?
It's still going to be under 5.
Yeah, it's still that's a phenomenal interest rate. It don't matter it is.
And under 5 was everybody's happy point until a couple years ago when the government started saying they're going to rates should be 3 or 3.5. No, it didn't feel that way. So
so next year will still be decent.
It'll be normal and it'll still be a good thing, but it does have to start moving in that direction to get the markets to have some normalcy with them.
That's good.
Okay, great.
So you hear it. I mean, if you are looking at buying a home, give us a call. You want to make sure that if you do want to try to catch the lower interest rates before they hit the whopping 4.5, make sure you give us a call.
That way we can. Good time too, exactly. And we're seeing with new home builders in Vegas, it seems like the end of the year is coming, so we've been starting to get some lists of outstanding inventory and let's move.
Since we're on that note, a lot of times they try to give you an incentive to go with a particular lender, their in-house lender. John also works with a lot of those new home lenders.
We have a home builders tour that we do every other Wednesday out of our office. So we have good relationships with a lot of builders here in town, so we can keep the deal intact and keep it in an environment that we're all comfortable with a lot more than not. So not always, sometimes it's best for the customer, and I truly do it based off what's best for the customer. If it's best for our client to go deal with the builder's lender and that's where they're going to get the best thing, it's going to put them in the best loan program, the best situation, I'll still walk with them every step of the way, making sure they understand what they're working with and what they're getting. But that's the bottom line, is if someone's in a loan that doesn't work for them, that doesn't do anybody in the industry good.
And that's part of it too. If you are shopping for a new home and you are looking for a brand new house, it's not a bad idea. give either me or Tim a call, because we can help you negotiate contracts at some of these new
Absolutely.
homes. We can help negotiate incentives. Just because they throw something out at you and say this is what we offer, it doesn't mean it's the final offer.
Exactly.
You get somebody on your side to help you.
Yeah,
So
my team. Who's on my team?
Exactly. Give us a call. We can help you out. Rates, they may have, if John's working with that lender, that new builder too, you know.
Especially on the standing inventory. Right now, we're finding that a lot of the
Exactly.
new home builders, there's that standing inventory out there more than there has been in a little while. So,
Yeah.
you know, and we can really work things out as far as that goes.
They're
So-
highly motivated to get those off the books.
Yeah.
It seems. That's what our experience is.
Exactly.
So-
Yeah, well, they always want them off their books because if it's standing, it costs them money.
Yeah, exactly.
So they want to make it go away. So give us a call. Our numbers are up here. You see mine and Tim's up here. John's is right here. So make sure if you have any questions about lending, give them a call. If you're looking at buying or selling a house, make sure to give Tim or I a call. And everyone out there, make it a great day!